So we heard from Mark there a little bit about what went wrong at these businesses. I mean, is there much in common between either of them, Maureen?
I think there is and there isn't. I think with Toys R Us, it hadn't really invested in its business for a long time. Also, with its parent going bust in the States, that didn't help. It was dependent on that. But it was up against a market where, as in the package, they say lots of people were going online. But it was also up against better players, like Smith's Toys, for instance, which is also out of town, is much more interesting to kids. And also Argos as well. Argos was taking its sales as well. So it just wasn't keeping up with what was going on in the market, whereas Maplin, I think, is more that it's in a very difficult market. And again, how can you develop that specialist store? It's trying it with Smart Home, but it's probably a bit little and too late.
Yeah, absolutely. I mean, Andrea, Toys R Us, as Maureen said there, real problems in the parent company, absolutely loaded up with debt. But the big box retail format that it traded from, has that really had its day? That seems to be a general feeling right now.
It does. I mean, the out-of-towns, retail parks, we went there to buy everything, the big hypermarkets, we went there to buy everything. The internet's really replaced that. That is the one-stop shop. But I think it's also very interesting that this is not just about the internet, and saying that these stores have suffered because of the internet is only half the story. As Maureen said, there are some very, very good bricks and mortar players. Primark, B&M, they don't even trade online, yet they're doing very well. It's not just about the internet, it's having the right products at the right prices where we want to buy. Yeah,
and I guess with Toys R Us as well, Hobbycraft, another player that's done quite well in recent years.
Exactly,
as well.
As Maureen mentioned, Argos, they've been bought by Sainsbury's. Toys are a big growing area for them. It's pressure from all fronts, not just the internet.
Yeah, and I was going to say about B&M, which is, general merchandise, that's big stores out of town. It has toys as well, and it's taking some of that share, and it's just as exciting for people to go to because of the prices, really.
I guess with Maplin, though, it hasn't helped. I mean, it's gone through a succession of owners during the last 15 years or so. There was a private equity-backed management buyout, then passed along to two other private equity firms, one after the other, loaded up with debt along the way. I mean, this is not a really sustainable way to run a business, is it?
No, it isn't. And it's a shame that, when they were trying to sell it, that the current owners weren't willing to put any more money into it, because Edinburgh Woolen Mills was looking at it and pulled out, although I don't know what Edinburgh Woolen Mills would have done with it, because they're mainly a clothing retailer. But
yeah,
it's they couldn't find anybody to buy it because it's obviously not viable as a business.
And yet, interestingly enough, Rutland Partners, the owner of Maplin, appears to have had quite a lot of security over some of the freehold assets. They've also been charging fairly onerous levels of interest as well.
Yeah, yes, it doesn't give business a very good name when that happens, because it's tough enough out there anyway, and the costs are always going up for retailers because of business rates and employment, pay rises as well.
Well, quite. And we now have, of course, the latest business rates plopping through letterboxes right now. I mean, Philip Hammond was trying to alleviate pressure on retailers, wasn't he? But it's still going to be quite a nasty shot for a lot of them.
Yeah, I think it is. And it's going to be quite difficult for them to get the rebates as well, isn't it?
Do you go along with that?
I do, and I think this weather is not going to help either. We're going to see people staying away from the shops. The fashion retailers are not going to do well in this sort of weather. So you've got those cost pressures, and you've got a time when footfall's likely to be very significantly down for many stores. Watch out for those weather-related profit warnings.
Yeah, good point. And of course, Toys R Us, another nail in the coffin was pension obligations. I mean, this was one of the final things it did for it ultimately.
That's right, and many retailers, they didn't offer large wages but at the same time they offered good pension contributions to make up for that. So many are saddled with big pension obligations, as with BHS.
So there's an awful lot of speculation that there will be other casualties before too long. Who are you keeping an eye on?
Well, as Mark mentioned, the three obvious ones, you've got New Look and House of Fraser that are also already talking to landlords, in the case of New Look, looking to close stores. Debenhams is cutting costs. You've also had a lot of retailers that had quite severe profit warnings after Christmas. Mothercare, their shares are down at a record low.
Yeah, they're off 7% today. Yeah.
But less than during the financial crisis. So, you know, investors are really factoring in, you know, significant sort of concerns there. So they would be the ones to watch.
But lest we forget, Maureen, there are winners from this as well. I mean, it was noticeable Dixon's car phone share price was up 1.5% today.
That's the thing. It's sort of almost last man standing, isn't it, Dixon's? It's an awful thing to say, but probably is going to benefit from it. And the same with, you know, Toys R Us. Then you're going to see that those sales are going elsewhere because we still buy toys, and it's you know, it's the like of Argos and Amazon and, you know, Smiths and the Entertainer that are going to pick up some of those sales, and of course the supermarkets too. Yeah,
I mean, I guess another reason for being worried about Mothercare is potentially you could get a fire sale of produce now at Toys R Us.
Yes, that is definitely possible. But they had, I mean, they had quite a severe profit warning after Christmas, so they're already trading from a lower base, and that won't help.
So you mentioned the possibility of more profit warnings. Do you think, I mean, do you sense that there could be anything really imminent? I guess it depends on how long this cold snap lasts.
Yes, it will do, and what happens to footfall. I mean, I think it would be much worse if it was in a month's time. January and February probably, you know, not such great months for spending on clothing, but it's still, you know, they've got to take the money somehow, and if it's not now, they've got to make it up in the future.
Quite so. Andrea Felsted, Maureen Hinton, good to see you both. Thanks for joining me.